From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB, all the stuff you need to know about the day in business and markets. I'm Kyle Rotter with Danny Akuye, and Danny, looks like we've slipped throughout the session. Not much of a lead to go by any means, but down by about 0.3%. It did seem to coincide quite clearly with that Chinese data that we received at 11:45.
It certainly did, and not only did the market go down a little bit, but also the Aussie dollar, although I was just checking in on both. It looks like the ASX 200 is off about 0.35% or 25 points, although the final numbers take a while to roll through. And the Aussie dollar is probably down ever so slightly, 0.1%, so not really much happening there. But you know, we didn't have a lead, did we?
No, we had no
You're
lead
looking
to
very
speak
tall.
of. Yeah, I'll get down. I wouldn't want to be too overbearing. But let's get to the three themes, because it will tackle some of the things that we are we've already covered off. Summer trading. It's one of those. Well, it is that time of the year where things get into a little bit of a lull, mostly the Northern Hemisphere. We talk about the summer driving season in the United States.
Absolutely.
And obviously the Europeans love to take their long summers, and overnight the Independence Day holiday. So we didn't have much of a lead to go by, not too much activity, but that was the big story. Again, we spoke about it before, but that Services PMI data, the Caixin figure.
That's how they pronounce it.
Well, apparently, I'm being coached
Good.
in the newsroom. I'm getting good. I'm getting better. But anyway, slowing down again. Another sign of weakness in China's economy. And the perennial question is, where are rates going? We did have a pause from the RBA yesterday, but now speculation turns as to what happens next, both domestically and abroad.
Yeah, absolutely. And I had a good chat with Chris Weston this afternoon about that. If anybody wants to check that out
always
later on.
Don't you? You have a very warm relationship, you and Chris.
Well, I don't know. We have good chats.
Yeah, good banter.
He explains how traders look at things, and I find that really interesting because I don't come from a tradery background. So there you go.
Chris is great value, of course, and a very good friend of AusBiz. But there you go. That's some of the themes of the day. I wanted to get through some of the areas of the market that were catching our eye.
Yep.
Starting off with the telcos, and we'll dig into one telco in particular in just a moment's time. Telstra up by 0.8%. Fairly mixed across the screen there, but it was the best performing sector, at least when I had a look about 5 to 10 minutes ago on the market today.
Absolutely. Nice and defensive, but there was a wee upgrade that went on there today, which we'll probably touch on later on, are we?
We will.
Yep.
Did want to look at metals and mining, because although the Services PMI data doesn't have a huge bearing necessarily on our miners, the manufacturing figures tend to be a little bit more, I suppose, meaningful in that regard, but still looking at a little bit of a mixed picture here when it comes to the likes of BHP, Rio Tinto, both marginally lower, although Fortescue's holding tough, around $22 per share.
Very mixed picture.
Absolutely, and also energy as well, both because it's cyclical, but also we've got some OPEC news coming up tonight. So the question around oil supply, especially after the weekend. I think it was a weekend, maybe it was Monday.
I think it was Monday.
Yeah, with the Saudis and Russians flagging potential further supply cuts in order to support the market.
Export cuts for Russia.
Export cuts. There you go. A key detail there when it comes to the energy markets. But also some corporate stories today as well. We'll get to this, I'm sure, in the leaders and laggards, but Bellevue Gold has signed an agreement with a wholly owned subsidiary of Genesis Minerals, where Genesis will process material for the miner. So it was up 4% today, seemingly off the back of that news.
Yeah, absolutely. And we also have some news from AMP. When it came back from its trading halt, it was off about 5%. But I think the courts have awarded an action against AMP, so they lost their lawsuit basically. Yeah, so that stock is down about 5%, and whilst they have awarded damages, I think of the order of about $930,000, there could potentially be further penalties.
Yeah, I think that's the concern. I think two of the group, if you will, have had damages awarded to them. One was for about $800,000 or so in damages, but again, there's several other members, or many other members associated with this class action, which, as you just said, Danny, sort of indicates potentially that...
one was 813, one was 115, but there's more potentially to come.
There are other groups, so there's going to be a process here, potentially an appeal from AMP, but if, it doesn't work for the business, then it could be paying out greater compensation there to some of these financial planners who, were evidently hard done by.
Indeed.
But we spoke about Telstra before. It was our stock of the day today, and Carl Capelingua from Think Markets and Michael Wayne from Medallion Financial were our guests, giving their view on the company.
As far as the underlying business of Telstra, well, there's actually more growth in Telstra. It's more of a growth-oriented business than it has been probably for the last 20 or 30 years, Koshi. So if you look at what the brokers are saying, and these are not my numbers, these are Thomson Reuters numbers, they reckon we're looking at about 8% compound annual growth rate for Telstra, which if you go back, I've analysed Telstra, I've been in the industry for over 20 years, so I've analysed Telstra many times over that time frame. I don't think I've ever seen it with an 8% compound annual growth rate for the next 3 years. So that's quite extraordinary itself. Traditionally, investors have been drawn to Telstra because of that quote-unquote high dividend yield, which isn't as high as it historically probably has been. It's around about 4% fully franked now, but it's still very, very attractive and reasonable growth. It's starting to turn over a little bit though, so it's not all green light from here. I would say be careful if it starts to trade below, say, 420. Then you might want to just take a little bit off the table because it has had a pretty good run. That's how you started this discussion. But as long as we stay above it, I think. Okay.
There's also talk of monetising some of the InfraCo assets as well, which can give them another sort of boost when it comes to earnings. But then in saying all of that, I'm more a hold on Telstra. As well as it's doing, there are still risks in terms of wages for them. There's obviously ongoing risks with some of those emerging players in the mobile network, and it's pretty expensive despite the earnings and revenue growth that's coming through and some of those dividend per share growth. So I'm more of a neutral hold on it. It's slowly but surely grinding high, but it's not that exciting. And I do think that when the worm does turn for the broader market, there'll be other pockets that do a lot better.
Okay, so that was probably
Cool,
generally a
lukewarm,
hold
yeah.
on that one, but it has run up quite considerably.
It's been a great performer. Yeah.
So if you got it, maybe hold it. Maybe not necessarily the time to buy, but well, perhaps we'll get a view on Telstra now from our guest, Joshua Barker from Macro Capital, joins us at the desk. Josh, great to see you. We did have Telstra as our stock of the day, was in the headlines today. What's your view on the company and I suppose the telco space more broadly?
Yeah, I think given where we sit in the market, a lot of uncertainty, but generally quite positive towards the market at the moment. Being involved in those defensive sectors that are going to have those really consistent revenues and earnings on the back of that is the place to be. So we like telcos. It's fairly limited on the ASX as to the top end of getting exposure to that. We do feel that Telstra has had a great run. It's at a 5-year high. The note from UBS was obviously a favourable one, but it was also favourable to the subsector, more importantly, rather than just Telstra specifically. So, I think given that one of the large theses for their upgrade was the income that you're likely to get on Telstra, which even if they do look to increase from that 8-cent mark that they've paid for so long, you're still looking at around a 4.3% yield in terms of the cash that you paid out. Obviously, there's franking credits on top of that, but it's not too greater than what we're able to get in the cash account at the moment. So, long gone are the days where a 4% yield is really quite strong. So I think if you're targeting capital growth, we definitely prefer Aussie Broadband. Now that Unity Group is no longer listed on the market, Aussie Broadband from a technology point of view, with going in with the optic fibres and the nodes, is probably the best on the market. We were a bit, frustrated with Unity Group getting bought out because they did have that really strong business model and they're able to sort of go in on a project level and do the cable from end to end without any of those sticking points. But I guess Aussie Broadband, it's had a really roller coaster ride since listing on the market. Listed at $1, first day was at $2 and then went almost to $5. Obviously gives you the confidence that it's a really strong performer, and then I guess it was a victim of its own success. Very marginally cutting guidance to the lower end of its own forecasts, but still really strong numbers. Like the most recent upgrade was actually a beat of guidance and a 27% growth on revenues. So hopefully if it can return back to that upgrade cycle, it starts to peak out lows on the chart as well. That fundamental news should start to flow through into the share price, and I think you're likely to get a lot more capital growth out of this than you will out of a Telstra.
It's annoying, isn't it, with everything? We're seeing so many companies being taken off the market at the moment, and we're not having a matching in terms of new listings. So we are seeing the ASX actually, the number of companies
and it's frustrating if it's a good company, you cap your upside. And if it's a bad company, you don't get the opportunity to regain some of those capital losses, and you're sort of left out of the game. For example, some of the takeovers flying around at the moment for Appen and even Tyro. These are stocks that a lot of investors are experiencing a lot of pain on, and they're hopeful that they'll come back up and that management will back themselves to get out of that, and then instead management's looking at exit strategies. So it doesn't fill you with a lot of confidence from an investor point of view, but it can work when it's a really good company, and unfortunately you don't get any more upside after all that hard research you've done to find that good company.
Yeah, indeed. Just in terms of the general market, obviously we had a little bit of a lift yesterday after the RBA's pause, and time will tell if it is a pause or whatever else it happens to be. But how are you seeing things more broadly at the moment?
Yeah, good couple of days on the back of data from the Aussie market. We had the inflation come out lower than expected. That just reversed the negative day at that stage to a positive day. Same thing with the RBA pausing, even though it was somewhat 50-50 expected. We were in the red prior to it, and we reversed to end up in the green. So whilst they may not seem like big moves, 0.5% I think it was that we gained on both of those days, I think there really are strong signs. And obviously we do take a lot of lead from Wall Street, which again is trading at yearly highs almost, and looking quite strong. There's a lot of cash on the sidelines. We do a lot of research into family offices and funds and sort of the cash that they're holding. A lot of everyday investors as well, anecdotally, that we're working with, also sitting on a lot of cash and have been for the last couple of years. That cash is going to need to get deployed, and those funds that are sitting on cash and obviously taking a fee for sitting on cash rather than the targeted investment being equities. Also family offices, they're looking over the next 12 months at deploying a lot of their cash into investments, whether that be private or listed. And then you've just got your everyday investor, which has been, sort of cautious for the last couple of years. But they want to build that share portfolio. They want to have assets that are growing. They want to have that income yield coming through. So I think that we've obviously seen it flow through to the larger cap companies in the US, albeit, driven by the AI rally. But that's the thing about these strong companies. It was over 10 years ago that people were saying that these FANG stocks are overvalued, and then they've
and
continued
their growth had gone.
Yeah, exactly. They'd continued to triple. So you never want to bet against these big FANG stocks or those industry leaders, more importantly, I should say, whether the name changes or whether there's a plus in the FANG, those top 10 companies globally that are just really strong performers. And the whole AI thing is a great example of that. Whether that revenues are justified or not, it's whether those companies can take advantage of that trend, and investors back that those industry leaders can. So we may sort of start to see that cash flow through down the market cap into your mid caps and then eventually your small caps down the track.
Yeah, really interesting point you make about family offices and lots of really defensive positioning in the market, because chatting to a couple of people over the course of the day, that whole soft landing potentially maybe might come about. And it's certainly, I know it's talked about, but I think a lot of people, particularly fund managers that have been around for a long while, they just go, oh no, that's just, that's a pipe dream.
Yeah.
But if the US can do it, I'm not so convinced here in Australia. As you say, the weight of money from so many defensively positioned portfolios, it would definitely make a huge difference.
Well, similar to how, it's not wise to bet against those big global market leaders. Very famous quote, never bet against the US economy. It's a very strong market, it's a very strong economy, and I think if anyone can pull off this, landing the aeroplane on the thin tarmac that's there, I think it is probably the US economy that can do that, and hopefully we follow suit with that too.
An upbeat message on a subdued day, but we really appreciate it. Josh Barker from Macro Capital. Thanks for your time. Okay, well, let's get to the leaders and laggards now. See what's on the top of the market. We spoke about Bellevue Gold there before. Covered off the news. Elders also up by 4%.
Yeah, we mentioned that one yesterday, remember?
Yeah, and we were saying that, maybe now's the time.
And some, Lovisa, interesting. I just actually wrote about a couple of those stocks. So Lovisa and Super Retail and Harvey Norman, they're all up about pre-today, up about 10% in the last week. So clearly some investors doing some rotational buying back into those sectors, and interesting that Seek is coming to life again, because that was looking a great bargain. I remember one of our guests on the call said, under $20, $19, that looked good. Obviously had a bit of a rally, but it's coming back to life.
Yeah, we'll see if it manages to sustain itself. Let's look at the laggards now and see what's on there. AMP, we told you the story that issue with the class action. So there's nothing new really when the company does run into legal or regulatory risks. Unfortunately, it seems to be the biggest driver of the company, or has been for a long time anyway. So there's another 5% taken off the share price today. I guess, a bit of a mixed bag here. Sainer Mining, Netwealth, Telix and PEXA. I mean, Telix is just pulling back. It did have a pretty solid run there a couple of weeks ago.
Absolutely.
Sainer Mining, obviously a lithium name. Not too sure if there's necessarily any news there.
No. PEXA might be falling, I don't know, off the back of Link. No, that's a very spurious connection. We'll leave that one in the garbage bin.
Oh, that's all right. We can make spurious connections here. We're completely unaccountable. But let's get to the small cap leaders and laggards as well. Bubs bouncing 22%.
Yep, and Bravura, there we go. That's another one of those stocks that they haven't had a takeover, have they, Josh? No, I don't think they have. So. No, but that I know there would be some very long-suffering shareholders sitting in that one.
Okay, so more power to you if you're in there. Let's go to the laggards on the small cap space now. DroneShield. Was it you talking to
No, Tessa. Tessa spoke to DroneShield today. They had an announcement yesterday, and I think it was one of the top performers yesterday. So
yeah, folks trimming there a little bit. Obviously, we have to say, if you want to hear the interview with the company, it was on the small caps, as Danny just said, with Tessa Silla today. So go back, that'll be on your platform in, if it's not already, in a short period of time. Let's just get a look at what's coming up over the next 24 hours, because the news flow is a little light, especially from the corporate front.
Yep.
Nothing exciting in the United States, which is almost the calm before the storm in a way. But we've got OPEC meeting tonight.
The minutes?
FOMC minutes.
Yep.
That'll probably be, not probably, it will be the biggest news of the evening, barring some kind of shock surprise. But the trade balance from Australia will come out tomorrow as well. So
absolutely,
that's what we have to look forward to from a local front. Not so much corporate news out tomorrow, it has to be said either.
Probably not too much now, because we're going to be running into reporting season in the US and here. I think US starts on the week of the 18th of July.
Yeah, it's always when the banks start, isn't it?
Yeah,
so it's around mid-month. Can sort of be give or take a couple of days around there. So yeah, calm before the storm. Maybe we shouldn't complain too much about the quiet conditions. We'll surely be run off our feet in due course.
Exactly. Everyone will come back from Europe and they'll want to speak to us.
They will. And Danny has all the good hookups in that regard. So we'll be able to get all the good hookups in that regard. You'll be able to get all the big names in who have been sort of fanning themselves on a beach in Barcelona or the Greek Islands or anywhere.
I don't think so, but anyway.
No. Oh well, I can only dream. But that'll do us for today on the COB. Remember, you can catch up on all the wonderful content that we have produced today on your website and app. Otherwise, have a lovely evening, and we will see you tomorrow morning.